Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, June 13th, and we got CPI data early this morning. Year over year came in at 4%, which was what was expected. And core CPI came in at 5.3%, which was what was expected. Both CPI and core CPI are down from the previous month, which is definitely positive. Big 0.9% drop in CPI and a 0.2% drop for core. So both in the direction of what we want to see. And we did see an early spike from both crypto. We did see an early spike from equities. Obviously, equities faring better than crypto. So let's go ahead and dive in on what's going on. So told the Trade the Chain community, and as we discussed yesterday, or actually we did not discuss this yesterday because we had Trading Rebellion, but told the Trade the Chain community yesterday and this morning, nothing really changed from yesterday to today, but seems like we are dropping a little bit lower after the US Open. If this does, start to drop towards the 102.45 area, would expect risk assets to get the benefits. And obviously, if it ends up getting back above 103.6, would expect them to risk assets to get the detriment of that. So, not paying too close attention to DXY as we have before, but still looking at it to build a base for any thought process moving forward. So as we can see, equities moved so high, busted back above that 43.30 resistance that we laid out yesterday, and obviously holding it strong with a nice little tap overnight. And then we had I say overnight, this candle was when the CPI numbers came out. So, big boost on that, slight sell-off, held obviously these highs right here, and continue to move higher. So we said if you hold 43, if you think you get above 43.62 is our number, then you'll likely move up towards 43.88 or 43.88. And if you get cut around this little range here, then you'll probably drop back down to 43.40. So I would not get, too overzealous with equities, because actually let's go ahead and get a bit wider of a view here. So if we look at the daily, so we broke above this level, which was a very significant level. We talked about this on Trading Rebellion and the daily show a lot. Now we're at this level of resistance. See how these wicks down here, got down to about the 33.68 level. So that is resistance now. And if you can get above this level right here, then that's where you move higher. So if we kind of go back over here, obviously zoom. If you get above this 43.90, 43.88 level, then you can get, up there to 44, I think 44.40. But I wouldn't automatically attack like 4,400 as your number. I'm just kind of pointing that out as the round number around that area. So if you did get above this level, you'd be looking to grab this liquidity here, and then obviously move up and that. But you do have some volatility here. So you have the lows right here and the highs right here. So maybe you face some resistance at 44.60, and then you've got really solid resistance up here at 4,500. So just kind of talking about what could come if we do have an extraordinarily bullish week, which would mean that if the Fed pauses interest rate hikes tomorrow and then gives a dovish indication, meaning the Fed says, we don't plan on assessing further rate hikes in the future. They basically give indication that they're done. All markets are probably going to explode because that's a dovish pause. But if they're saying, we're going to pause, but we're likely to hike in the future based on whatever data XYZ appears, then that would likely be bearish. And I would at least expect us to get sent back down to this, range at least for, a bounce at the 42.60 level. Maybe at worst, it comes down to this range because there's a lot of trading going on here in late May. So something to consider, like we said, FOMC is tomorrow. We of course have PPI in the morning, which will likely not be as impactful as CPI, but will definitely give some morning volatility. And then we have the FOMC interest rate decision, which is expected to be 0 basis points, meaning a pause. But then we have Fed Chair Powell's press conference. So like I mentioned, if we get that pause, which I think is very likely at this point based on how the probabilities have lined up, if we get that pause and Jerome Powell then says we expect to continue to hike in the future, prices are likely to go down. If Jerome Powell says in his press conference, we are likely to, we're not thinking about hikes in the near future, prices are likely to continue higher. So very much something to consider there, but we don't really know what that is. The indication right now from the market seems to be a pause and then hawkish language, which would mean we may hike in the future. So that's the current market thesis. If you wanted to fade that, obviously you'd get long, but my suggestion is to play it patient, because after a big boost, some confusing FOMC data, it's going to take a lot of digestion, and I don't think anybody's going to be able to read everything on its surface immediately. It's probably best to just react to the press conference. Remember, the press conference is where the momentum solidifies. So we're going to get all that wonky volatility at 2 p.m. Eastern into 2:30, and then at 2:30, Jerome Powell's press conference is going to start. And then he's going to give indication of whether they're pleased with the data, whether they're not pleased, whether they think they're going to hike in the future, whether they don't think they're going to hike in the future. He's going to take questions. And that 30 minutes will then be where price action momentum gets solidified. And therefore, it's better to take the trades, in that 2:30 to 3 p.m. Eastern window than it is at or before the 2 p.m. window. So just my suggestion all around there. Looking at Bitcoin, in my opinion, and we told the Trade the Chain community, this does seem pretty weak to us. Obviously, big Darth Maul right here at the CPI number. So basically had a big boost and then, fell off. Obviously, careened down to the support level of 25.8 that we've had lined out. A lot of trading around this level. So obviously it's still trying to hold. Technically, it's been making higher lows, technically. And it has been making some higher highs, but not very convincing. Unable to get above the previous week's VWAP, unable to get above the 1 hour estimated 200 moving average. But it is, holding this 25.8 support. So if it breaks below 25.8, what's going to happen is it's probably going to drop down to grab this liquidity down here, which is right around 25.3. And if you lose 25.3, then you're starting to talk about the 25 to 24.8 level. If you hold above 25.8, what you need to do first, let me go ahead and get rid of some of these lines. What you need to do is to get above the previous daily close, which kind of coincides with the current week's weekly VWAP as well. So really, ideally, if you're really looking for a core number, it would probably be 29 or 25,960. So get above this level, then you can start to talk about longs back up to this liquidity. And then if you break above that, then you're getting back up to the 26.5 level. But, rejection at the previous daily close, and then a break below 25.8, obviously headed back down to this level. And then if you break below this level, probably headed to 25 or, 24.8. So outlook not looking very good for Bitcoin right now, I must say. But obviously it has, actually fascinatingly enough, we've seen a lot of spikes into the evening and then sell-offs into the U.S. Afternoon, and then we start to get bought back up. So Sunday was a little bit weird, but let's so Sunday, decent, really weird. We get bought back up into the afternoon, sell-off, a little bit buy overnight, sell-off, buy back up into the afternoon, bought overnight, drop, and then now we're getting, someone's trying to buy us back up during the early afternoon hours again. So this has kind of been the pattern, but I do think that it is more likely than not that we do end up breaking down this way. But we could see another reclaim of the previous daily close or weekly VWAP before then. But my indication is short. That's XRP. Actually, let's go ahead and go over XRP because we did talk about this yesterday on the Trading Rebellion before we get into ETH. So, what we did say is, this area probably goes back up and then it gets shorted down. So obviously fantastic deviation there. So if you were awake and shorting, at the, let's actually zoom into the 1 hour to get a bit better review. So it spiked up directly at 7 a.m. and then closed and then shot back down at around 8 a.m. Eastern. These are Eastern time. So this is before CPI. So, big spike, sell off. While I would not recommend shorting right now, I mean, you may be able to get away with it just because this is an absolutely disgusting candle. And remember, all this price action was in anticipation of the Hinman documents. So the Hinman documents have been released. They weren't exactly bearish or bullish. There's a lot of arguments that you can make on either side on whether it's good or bad for the SEC. In my opinion, the basic, if you're asking about, I'm not sure what you're saying that is today. If you're asking about the Hinman documents, they came out early this morning, right around when this volatility actually hit. So the documents were not really bullish or bearish. There's definitely some indication of both sides that you can make from reading them. But in my opinion, it's a nothing burger. So if you assume that all of this price action was because of a nothing burger, then what you're probably going to assume is that this was, some sort of double top, maybe a lower high, and then price would eventually trickle back down to this level. So I think that's probably a decent assumption. Could definitely still survive at the 49-cent level. So it would probably be better to short it on a break of 49 rather than start shorting now. But very similar to steep drop right here, had some volatility for several hours before dropping lower and subsequently grabbing this liquidity in the coming days and weeks. So while I'm not saying, again, it will happen, I think it's likely to happen considering the news is over, wasn't really positive, wasn't really negative. It's we move on. So so basic, I meant the Fed press conference. The FOMC is tomorrow. FOMC is tomorrow at 2 p.m. Eastern. The rate hike announcement is at 2 p.m. Eastern, and then at 2:30 p.m. Eastern is when Jerome Powell's press conference starts. So keep a lookout for that. His presser and his announcement will obviously all be on CNBC, Fox Business, Bloomberg, whatever. So pretty easy to catch live as well. Looking at ETH, considering we are, don't think XRP is looking great. Neither is ETH. So this, just kind of zooming out, this, looks a little bit bear flaggy to me. You've got, stuffed right here, lower low, back down to the low end of the range, grab that liquidity. So, I mean, it could definitely break higher, but it's looking very weak right now from a high time frame perspective, and from a low time frame perspective. So let's go ahead and dig in. Again, got to this, this level, shot back down, broke up to that level again, immediately shot back down, and then similar to Bitcoin, gets sent down to previous areas of liquidity. It's also being again rejected off the previous daily close. So let me go ahead and delete these because we did say if it dropped below this level this morning, then, obviously it's going to grab that liquidity, which it did. So, obviously if it drops below kind of 1718 level, going to pretty much, drop down to 1685. If you can reclaim the previous daily close, which is around 1742, can probably move back up to 1760, maybe, grab this liquidity again, somewhere between 1770, 1777. I would expect more shorts to come in here because it's going to coincide with the 1 hour estimated 200 moving average, but, definitely could do that. But, it's looking extremely weak right now. Now it has, busted back up above this level a couple of times, but, it's certainly not looking, bearish engulfing, not a bullish engulfing, and then your rejection off the previous daily close. Not very positive in my opinion. It definitely could still work out, but in my indication, this looks short, and I don't think FOMC tomorrow is going to be very positive. Anytime we pump into FOMC, especially from the equities point of view, it does not seem good, and we've been trying to recover in terms of altcoins and Bitcoin, and hasn't really worked out that well either. We've just been kind of looking really bear flaggy across a lot of assets, and therefore, my opinion is bearish. My bias will change if we can get above the 1740 level, at least my temporary bias. And then if we get back up to this level, then I'll add more shorts and or reassess if it's really strong and looking like it wants to break above 1780. So that is the outlook for the day. Remember, again, FOMC will PPI tomorrow morning, then FOMC tomorrow afternoon. So Wednesday will not be short of volatility. Therefore, we may not break down now, we could have a squeeze. I'm not saying that just because I am bearish does not mean price will move in that direction. That's just my opinion. And we've been bearish, since the morning, since the CPI numbers dropped. So if that changes, we'll make a big update to the community. But right now, feeling bearish. But with that being said, don't, if you want to follow me, again, it's not investment advice. I don't recommend anyone does follow me. But if you do, I would recommend not using a lot of leverage or a lot of capital, because it's FOMC day, and time and time again, typically some of the toughest days to trade is FOMC, unless you're really on the right side of the money, because we've had a lot of volatility. There hasn't been a super sharp sell-off or a super obvious trade during FOMC the past few. A lot of people do feel that will come today, but again, that can also be another reason to take a chill pill, because if everybody is trying to trade one side, maybe it works out for 5-10 minutes and then we get reversed. So my recommendation, be reactionary to FOMC. Don't gamble too much money. And if we break below current support levels, then that's when I'll probably start diving in with some cash, because then, we snap that support, we're moving lower. And then we're trying to take care of another. I will say we probably won't get another giant move like this. We could, but definitely we'll be taking profit quickly on any crazy volatility in the charts, because it is that season to take your profit, walk away, find your new setup, and only interact when it's opportune. So good luck, happy trading. Speak to everybody tomorrow before FOMC. We'll do a little primer before that, but if you don't catch me before FOMC tomorrow, good luck, happy trading, wishing everybody the best.